Hi viewers, welcome back to my YouTube channel. So today we are on the website of investopedia.com, and on this video we have to in this video we are going to learn about what are commodity markets, their definitions, their types, their examples, and how they work. So let's see how it goes for us. So it is mostly for businesses, right? Like commodity markets are mainly run or looked after by the businesses. They really like this thing. Let's see what is a commodity market. A commodity market is a marketplace for buying, selling, and trading raw materials for primary products. Commodities are often split into two broad categories: hard and soft commodities. Hard commodities include natural resources that must be mined or extracted, such as gold, rubber, and oil, whereas soft commodities are agricultural products or livestock, such as corn, wheat, coffee, sugar, soybeans, and pork. So the key takeaways are: a commodity market involves buying, selling, or trading a raw products such as oil, gold, or coffee. There are hard commodities, which are generally natural resources, and soft commodities, which is a livestock or agricultural goods. Spot commodities makes involvement immediate delivery, while derivatives market entails delivery in the future. Investors can give exposure to commodities by investing in companies that have exposure to commodities, or by investing in commodities directly via futures contracts. The major US commodity exchanges are ICE Futures US and the CME Group, which holds four major exchanges: the Climate Chicago Board Trade, the Chicago Mercantile Exchange, the New York mm, Mercantile Exchange, and the Commodity Exchange Incorporation. So, how markets work? How commodity markets work? So, commodities markets allow product producers and consumers of commodity products to gain access to them in a centralized liquid marketplace. These actors can also use commodities derivatives to hedge future consumption or production. Speculators, investors, and arbitrators also play an active role in these markets. Certain commodities, such as precious metals, have been thought to be good hedge against inflation, and a broad set of commodities set as an alternative asset class can help diversify a portfolio, because the prices of commodity markets also tends. Wait, let me just click out this away. Okay. So alternative assets class can help diversify a portfolio, because the prices of commodities tend to move in opposition to stock. Some investors also rely on commodities during periods of market volatility. In the past, commodities trading required significant amounts of time, money, and expertise, and was primarily limited to professional traders. Today, there are more options for participating in the commodity markets. History of commodity markets. Trading commodities goes back to the dawn of human civilization, as tribal clans and newly established kingdoms would barter and trade with one another for food, supplies, and other items. Commodities trading predates that of stocks and bonds by many centuries. The rise of em- empires such as ancient Greece and Rome can be directly linked to their ability to create complex trading systems and facilitate the exchange of commodities across vast swaths via routes like the famous Silk Road that linked Europe to the Far East. Today, commodities are still exchanged throughout the world and on a massive scale. Trading has also become more sophisticated with the advent of exchanges and derivatives markets. Regulate and standardize commodity trading, allowing for liquid and efficient markets. Perhaps the most influential modern commodities market is the Chicago Board of Trade (CBOT). Established in 1848, the CBOT originally traded only agricultural commodities such as wheat, corn, and soybeans in order to help farmers and commodity consumers manage risks by removing price uncertainty from those agricultural products. Today, it lists options and futures contracts on a wide range of products, including gold, silver, US treasury bonds, and energy products. The Chicago Mercantile Exchange (CME) Group merged with the Chicago Board of Trade (CBOT) in 2007, adding interest rates and equity index products to the group's existing products agricultural offerings. So this is all. Thank you so much. See you soon in the next one. Before that, subscribe my channel, press the bell icon for more updates. Bye bye. Take care.